Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hey everybody, checking in on oil. So we had the dump off yesterday and an oversold bounce with a high of 52.93. So at that point, we have our high of the bounce. We have our low of the dump. That low was 52.11, so that's a must-hold support if the bulls want to progress from here with higher lows and higher highs. And that's exactly what happened. So we pulled back and bounced off of 52.13. I would call that a double bottom. It's not exactly a double bottom, but it is close enough by 2 pennies. So a higher low by 2 pennies. And then once we broke, if you wanted to be extra cautious, I call that a bottom fishing play, where you would make a bull entry based off of that support and you would exit if that support were to break. That would be your stop loss just below it. But if you wanted to give up some reward in order to eliminate a lot of risk, you would wait for that higher high to be hit with a break of 52.93. There's our higher low, break 52.93, there's your higher high, and still some decent gains to be had there as we are now up over 40 cents from that point. So a bull break, consolidation, now a higher low, and these lines I've left on here from previous action back here. Look how perfect that consolidation was right off of that 53.01 level and continuation to a little higher high. So resistance right now is 53.40. There's not a ton of resistance at this range because of how steep this dump was. So I would be looking back at this previous support, now resistance, in the 53.39, 53.45 range up here. And then we're looking at, there's pretty much a bunch of resistance because of the sideways trading that did occur. Let's call it between 53.40 and 54. So that's where we can expect to encounter some resistance. But we look at the daily time frame, and although it was a big dump day, no doubt about that, we held that support, 52.11, double low of consolidation, and now nice green day and a nice solid close. So we do have the inventory report for both natural gas and oil tomorrow. We have to see how that reaction goes, but certainly not a dump here. We did maintain support, and the bulls came out on top, I would say, with how things are when it's all said and done here. We're at a price where we were at just a week ago, and the bulls are in control on the short term with this oversold bounce playing out. So we'll see how much momentum they have to the upside. A break of 52.11 is a very, very clear bear signal, and it might just be a short-term bear trade because obviously the daily chart is an uptrend, but we're going to see another leg to the downside as soon as 52.11 breaks. So you can do nothing else with oil, trade your other names, trade your other tickers, and just keep that on watch, and as soon as you see 52.11 break, you should initiate that bearish position that moment, and we'll see what kind of downside we would get. But as of right now, that support held, and the bulls are in control of the short term. So I appreciate you watching. We'll see what that inventory report does, and we'll check back in tomorrow after hours.